Good afternoon, everyone. As you can see, I've changed my title for my research, Motivations for Business Structure Choices for Australian Small and Medium Enterprises. My supervisors, Professor Brett Frodenberg, Dr. John Menas, and Dr. Richard Cope. I will go briefly. I will outline the literature review, research question, methodology. However, I will focus on the result and for stage 2, and I will give initial recommendation. Scholars of Wilkinson theory suggest that the structure choice is a trade-off between tax and non-tax costs, with firms likely to choose a business structure that minimizes these costs. The most important consideration, this study is by Thread and Frodenberg 2017. As you can see, asset protection was the most important consideration, and then however, tax was some of the most important tax consideration in the top 10 as well, tax consideration. As we can see here, in the Thread and Frodenberg study, the blue shaded area is the most important 10 consideration, and then with the Frodenberg result is the blue shaded are the common for both study. The green shaded area is only from the top 10 in Frodenberg result, but it's not from the top 10 from Thread and Frodenberg result. The orange shaded, it wasn't identified in Thread and Frodenberg result. So research question, first research question, what are the reasons for Australian small and medium enterprises for the adoption of business structures? What are the implications derived from the adoption of discretionary trust by Australian SMEs compared to other business structures? We had 2 stages. Stage 1 was I interviewed 10 SMEs advisors, accountants, and lawyers. And the purpose of stage 1 was to develop the 6th vignette for stage 2. Stage 2, which is a case study. I interview 48 SMEs, advisors, and accountants, and it's 6 set of vignettes. A total of 12 scenarios is including new and established business, and it has got a survey at the same time. So each of the advisors were given one scenario. So some of for the new scenario, the advisor a week later I asked the advisor what would they recommend for the new SMEs wants to start a new business, and why. And for the established business, I will ask them if they would recommend a different structure and why. And it was such a question such as, what are your key reasons for recommending such a business structure? What are the advantages and disadvantages for your recommended structure? And if there is anything that hinder the implementation of your recommended structure. And then we analyzed, the data was analyzed by a team. The team will identify in prior literature and by identifying them and analyzing the data from the interview. And it's a case study model. It's to compare and contrast. So it was one unique finding we found. I found that out of all the participants except one, they recommended a combination of structures, and that is discretionary trust is within the structure either as a trading entity or as a shareholder in a trading entity. So what happened to the single use of structure? I don't know. So 62.5% recommended that this structure, a company to operate the business with a discretionary trust as a shareholder, and then a corporate trustee or individual trustee. 21% recommended a discretionary trust to operate a business with a corporate trustee. However, 14.5% recommended this structure. It was, this structure was recommended for medium-sized business, and that's what advisor called a Rolls-Royce of structures. So as we can see here is everything neatly separated: a company to operate the business, a company to hold the patent, a company to employ, and those 3 companies are owned by a holding company, and then at the top of the pyramid we've got a discretionary trust, and those 4 companies form a tax consolidated group. So that's a summary of factors. As you can see here, the green shaded area is strong factors. It's between 175. The turquoise blue is lost my case. The turquoise blue is medium, is between 75 and 50. However, the yellow is low, is less than 50. So for the scenario 1, which is a little bit less than is macro business, it's not small yet, sorry. They recommended trading company with a discretionary trust for the established business. However, for the new business, they recommended a trading discretionary trust with the corporate trustee. Similar recommendation for scenario 2, which is a macro business for both of them. And for scenario 3, it was similar, the recommendation, trading company with a discretionary trust. As we can see here for scenario 1 and 2, for the recommendation between comparing the established and the new business, we can see like the structure is flipped around. For the scenario 4, it was that's a medium-sized business. It was a consolidated group by a discretionary trust. It was recommended. Scenario 5 and 6, they are small businesses, and you can see it's a similar, same recommendation, trading company with a discretionary trust. A result, the asset protection was a very strong factor, 94%. So they recommended corporate trustee rather than individual trustee to protect individual from the risk of the trading of the business. So the most participants, they recommended that significant asset to be held separate from the trading entity to safeguard the asset from the risk of operating the business. So they recommended that retained earnings to be moved into a corporate beneficiary just to be safeguarded from the trading of the business as well. So discretionary trust may not provide an owner in the case asset protection for the owner in case of in divorce cases. From the family law perspective, that's the asset for both parties in divorce case. Tax minimization was as well a strong factor, 94%. So we've got the low corporate tax rate, 26 currently, and going down by next year to 25%, versus the high marginal tax rate in the trust, 47%. Tax benefit, the flexibility in distribution of income through a discretionary trust. When we are having a trading company and a discretionary trust as a shareholder, it can give them flexibility and streaming frank dividend, and to family members who they're not on low income or they're not working, and they can as well benefit from the frank refund. Small business concession, we've got a discretionary, under a discretionary trust, you can access 50% capital gain tax CGD discount on the sale of the business. However, under a company, you cannot access that. You can access CGD discount on the sale of the business, of the asset under a discretionary trust. However, you cannot access that under a company. So having a company with a discretionary trust as a shareholder, it might give access to the 50% CGD discount on the sale of the share. Succession planning is very important or exiting the business for the small businesses. Under a trust, you can access to CGD discount on the sale of the business, as we said previously. Company cannot access that. So under a trust, you cannot sell the business. However, you can sell only the asset of the business. But however, you can sell the business out of the company. You could by issuing a share to a new investors. A tax-free transfer of control of business by simply stepping down as a trustee under a trust. However, under a company, transfer of share can trigger CGT. So a trust has a limited life of 80 years. It's not an ideal structure for intergenerational business. However, it might work for the first and second generation. By the time they want to pass it for the third generation, the trust is going to vest there. Infinite life for company. So having a trading company with a discretionary trust, it can provide sale of the business or part of the business by selling the share to a third party. So ability to retain profits, very important for the business. So to grow, so a company has the ability to retain the profit and keep that profit at low corporate tax rate, whereas trust profit has to be distributed to beneficiary or to a corporate beneficiary. A company, as we said, can reinvest the profit back in the business. Basically, you pay less tax and you invest more if you have a company. Under a trust, highest marginal tax rate on retained profit, inability to invest the profit. So, however, we've got issue with Division 7A if you want to reinvest the profit back. So let's say we've got discretionary trust here, make a distribution to beneficiary A and then beneficiary B, and then in the tax manners and effective tax manners, sorry, and then you've got so much extra profit, for example, they want to dump it to a corporate beneficiary or a bucket company. They want to invest their profit back into the business. And then we've got issue with Division 7A and adverse tax consequences, as this can be regarded as unpaid present entitlement. So if there is a requirement need for working capital, then the business will operate through a company with a discretionary trust as a shareholder. So because a company can have a new investor issuing shares, trust, inability of issuing share is only for related party only. Access to government, company can access government support for R&D. Profession, the structure depends on the risk on the business itself. For example, a company, it would recommend it for a high-risk business with a limited liability of a company. So government like to engage when the business is traded through a company. Trust, government, they don't prefer to trade with to deal with it when the business is in trust. Company can be seen simple to navigate for everybody. Trust has been seen very complex for everybody. For international, they don't jurisdiction, they don't understand what is trust. Certainty on the identity of the shareholders and director in the company, difficulty in the trust to trace the ownership and trust. However, this one is for Thea. Trust is an ideal structure for farmers to hold assets, and it can be seen by ITR as less suspicious than when it has been used for law or accounting firm. A common view among participants was that adopting multiple structure in one entity can create complexity and high compliance and administrative costs. Company are easily understood. Everybody can understand company internationally as well. Understanding the trust can be difficult for the taxpayers. It requires professional advice, accounting, and lawyers. It costs money as well. Transfer costs, mainly for the established business, they raise the issue of capital gain tax and stamp duty costs. Stamp duties depend on the state policy as a consequences of restructuring the business, and this could inhibit businesses from restructuring. However, there are restructural over relief, such as subdivision 328G. However, its application is very uncertain. It's uncertain, and another additional administrative cost. Over time trend in structure, it has been a decrease in the corporate tax rate with there's a decrease in corporate tax rate and an increase in complexity of trust. This can create a shift from trust to a corporate, a shift from a trading trust with a corporate trustee toward a trading company with a discretionary trust as a shareholder. Maybe pre-December 2009, I would have suggested a discretionary trust to operate the business, and where she wanted the corporate tax rate, she could have used the corporate beneficiary, which wouldn't require at that time to cash flow the profit. There is a consequences of ATR change of attitude toward trust and company. Oh, sorry, I can't see it. Actually, you can read it. I can't see it from the. I can't see to read it. You can read it. Okay, let you read it. Yeah. Okay. Move on. So, what if not? Pardon?
5 minutes.
Okay. Yeah, that's good. Yeah. What if now changes to the policy? So if there's no change to the policy, no changes to the policy, we've got the complexity and compliance costs for small businesses, and this can make life hard for them. Breach of tax neutrality, we want taxpayers to comply, and on the other hand, we've got different tax rates between different business structure. And loss of tax revenue for government as each year 1.2 billion according to ITO. So that's from deliberately using the trust for tax avoidance. Adopting an appropriate structure, significant, they cannot change it it can result in significant transfer costs. It's very practically common for small business to start as a sole trader. However, as the business grow, they need to change the structure. Unfortunately, they cannot change from sole trader to the most common structure company with a discretionary trust as a shareholder. Yes, so otherwise there will be significant transfer cost. Inability to restructure to the common structure company with a discretionary trust. It's not always for a tax. It's not always the reason. The most important is asset protection. So if you get sued and you've got nothing, you've got no tax to pay. So initial recommendation, what is ideal is to set the structure correct from the beginning. This requires some government support, such as giving free advice for new business that want to start a business, or tax offset for professional advice. They can adopt similar tax treatments across different structure. That this can create tax neutrality, allow trust to accumulate profit, and tax trust as a company. Then this can promote business growth. Extend the scope of the restructural over relief to apply to company with a discretionary trust and to succession planning. Taxing the family as a unit of taxation rather than individual. That's what is the current policy adopted in France. With this, it can provide a greater fairness in the taxation system. With that, we can have fairness or an equity between wage earners, sole traders, partnerships, company, and trust. So, and when business owners and advisors that want to recommend choose a structure, so that structure will be based on its commercial merits. Thank you so much.